Test, 1, 2, 3. Now, I've always been a big fan of investing in land, but I wish I had started when I was a lot younger. About 15 years ago, I had the chance to choose from several lots of land for sale around where I grew up, but I didn't make the right call on any of them. Now, real estate prices generally go up, but the real big question is, when is the right time to buy? Now, when I started real estate at 20 years old, I thought owning land was for the ultra wealthy, like the Bill Gates of the world. And I couldn't have been more wrong. It was a lie that I kept telling myself that was just factually untrue. And it took me nearly a decade to realize it. Missing those investments set my portfolio back maybe 9 or 10 years. And at its core, economists and pro-investors will argue that there are clear market indicators that signal when to buy, hold, or sell. So, for example, low unemployment generally boosts consumer spending, or rising interest rates can cool off real estate, like what is happening literally right now. And more building and construction permits show confidence in the short and midterm economic growth. Now, we're in a bit of a shoulder season of stagflation right now. Relatively high inflation paired with slow growth. We're on the edge of a bear market if things don't change, which is going to be up in the air with elections coming around, which is also why we've seen that interest rates are starting to dip. Now, there's not much that we can do about it. It's out of our control, unless your name is Jerome Powell and you happen to be tuning in on this. Then, hey, it is in your control. Please help us. But regardless of bull or bear markets, there are always opportunities to invest and buy. And in this video, I'm going to share the signs that I've learned over 20 years that show when it's time to invest in land. And as of October 2024, these signs are getting pretty spicy. Now, while no one can predict the market perfectly, better tech and data can help us spot trends and make smarter moves. And it's not about being right all the time, but instead significantly improving your odds of winning. But when you do miss, you've minimized your losses. And how do we know we are in the right space and environment to do all of that? And this video is about that question. Let me show you the signs that say it's time to invest in land. Now, I've really decided to focus more on content creation lately, and I've set a big goal for myself to hit 175,000 subscribers by the end of the year. So if you've been here before, watched my videos, and found value in them, I'd love for you to help me reach that goal by hitting the subscribe button and turning on notifications. It would mean a lot. Thanks. Now, today, I'm in my newest studio on the first larger piece of land that I invested in over a decade ago. But first, how do we decide whether to invest or not? Now, it's not just about market signs. It's about our psychology that shapes the way that we see money and investments. Research shows that losing something hurts twice as much as winning, and that's what we call loss aversion. In 1979, Daniel Kahneman and Amos Tversky's work led to a major shift in understanding decision-making. It was called the prospect theory, showing that humans do not always act rationally in economic sense. But another key finding that is used today in behavioral economics, psychology, finance, and marketing is that losses hurt far more than equivalent gains feel good. Now, for example, losing $100 feels twice as bad than the pleasure of winning $100. This explains why missing out on opportunities like those previous properties or stocks you could have bought or sold too early stings just as bad. So, knowing how we innately think about how we decide to invest, the first sign is, are you hearing about zoning changes? Now, zoning changes can be a goldmine for savvy investors. Cities like Austin, Portland, and Miami have seen property values skyrocket in the recent years after rezoning. In Austin, single-family areas rezoned for multifamily housing became prime real estate overnight, and now you can't find a property that doesn't have at least an ADU or a second condo or sometimes even a third condo. And I experienced this firsthand in Portland. We wanted to add units to a specific property, but we were expecting a lot of restrictions. But to our surprise, there were actually no limits on how many units that we could build. We just had to meet building requirements and fire codes.
Hi, this is Pam with the City of Portland Building Department. How can I help you?
Hello, I am calling about a property that we have under contract.
As long as you adhere to building and fire codes, it doesn't appear that there's any limit on how many units you can actually build. So, yeah, I mean, other than sprinklers, you can pretty much do what you want.
Oh, wow. I wasn't expecting that.
The reason behind this is twofold. One, cities are pushing for more density to solve housing shortages. And second, it's revenue. It's to boost economic growth. Even in places like West Virginia, zoning changes are driving development and tourism, which means a lot of money for the government. Now, zoning shifts often signal growth, whether it's new businesses, infrastructure, or population increases. Land gives you flexibility. Sell, build, or hold as values rise. Stocks, bonds, and crypto can bring great returns, but the volatility can be exhausting. Experts always talk about diversification, but owning both Chipotle and Nvidia isn't real diversification. They're still stocks, prone to wild swings. Land, on the other hand, is stable, solid, and consistent. And if you've invested in land near cities in the 80s, 90s, or early 2000s, you would see massive payoffs right now. And with urban sprawl continuing at a relatively high rate, land remains a smart bet. Now, I started with a small $5,000 stock portfolio just for fun, but even that tiny amount was an emotional roller coaster, especially the last couple of years. Friends and family with their entire net worth, or large sum of their net worth, in the stock market or crypto had it even worse. I've seen people lose sleep over market swings and miss out on massive opportunities because their money was tied up in volatile assets. Some even lost everything due to major collapses like 2008. Land, though, is a physical asset with real value, intrinsic value. It doesn't plummet overnight like stocks. Just think like Intel, Nike, or AT&T. Plus, no one can make more land, unlike stocks, which can dilute shares. Now, while stocks do fluctuate, land tends to appreciate steadily, often rising with inflation. And with land, you're in control. You can improve or develop it to increase its value, something you can't do with stocks. Now, with the ups and downs of the stock market and municipalities planning for growth, let's dive into real-life data just before the 2008 crash to see who would have made the better investment decision. Now, let's first set the sandbox. In 2007, the median home price was around $248,000, and the S&P 500 closed near $1,565. Fast forward to today, October 2024, the median home price is around $420,000, while the S&P 500 stands at about $5,800. So during that time period, the stock market returned 370% plus a yield of approximately 1.83%. Real estate appreciated much more modestly at 170%. Now on the surface, it seems pretty clear who the winner is: stocks. Let's take a closer look at Jane and Jimmy. Now let's say in 2007, Jane bought a home for $248,000 with 5% down, putting $13,000 into her new property. Jimmy, on the other hand, took his $13,000 and invested it in the S&P 500. Today, in 2024, here's where they would stand. Jimmy's portfolio with dividends reinvested is now worth approximately $64,000. Not too bad. Jane's home value increased, but she also made $140,000 in mortgage interest payments over those years, bringing her total cost to $388,000, and with her home now worth $420,000, that's only a $32,000 gain, approximately half the value of what Jimmy saw from stocks. But watch what happens when Jane pulls one lever. Imagine Jane used her property to earn $500 a month after taxes, renting part of it or hosting a guest suite. Over 17 years, that income adds another $102,000 to her net return, bringing her total gain to $134,000, more than double Jimmy's stock return. Now imagine that she brings in $2,000 a month instead. Her total grows to $440,000. And if Jane were to generate $5,000 a month, she's looking at a staggering $1.05 million. In the simplest scenario, Jane returns could easily double Jimmy's stock gains. But let's go a step further. If Jane were to improve her property with renovations, added a guest house, or even built another home or split the lot, her return on that initial $13,000 grows even more exponentially. And here's what's key. Real estate offers intrinsic value beyond returns. Jane can live in her property, improve it, and see less volatility and stress than in the stock market. Here are just a sampling of just a few properties we have helped do just this to show this isn't a crazy or abstract idea. And if you're interested in getting support on how to find land and property that can be used for both personal and investment purposes, that's something my team and I specialize in. There's a link below in the description of this video. Schedule a call with me and my team, and let's see if there's a way for us to work together. When you see new homes, businesses, or infrastructure going up, it's a pretty clear sign. This area is about to boom. Developers don't build randomly. They've done the research and they're betting on growth. This is your chance to buy land and properties before prices climb. Now, my good friend Corey is a major developer in Austin, spends years and millions planning projects. When someone with hundreds of millions in investor dollars starts building, you know big things are probably around the corner. Getting in early on land before development means you're buying at lower prices. As homes, businesses, and city services roll in, your land's value can skyrocket. Don't forget about rural land either. You can buy bigger plots of land for less. And as cities sprawl outward, that quiet piece of land could turn into prime real estate, just like what's happened with Tesla and Samsung's expansion in Austin. Now, when vacation homes start popping up, it's a clear sign that the area is gaining popularity. And land prices are likely to rise. Getting in early means you can buy low and benefit from the boom. Vacation homes usually appear in desirable spots, whether it be by a lake, a beach, or mountains. Developers see potential for tourism, followed by restaurants, shops, driving up land, demand for both personal and commercial uses. Take Wimberley, Texas as an example. Just a decade or so ago, it was a quiet, sleepy little town that locals would go and visit. But vacation homes have completely transformed it and land prices have soared. One of our very own members bought 10 acres out there, built cabins, and now earns $25,000 to $30,000 a month while his property's value has skyrocketed. Whether near cities or in rural areas, land by vacation homes can be a smart investment with big growth potential. Take a look at this map showing impervious cover across the United States over the last 20 years. Now, impervious cover includes surfaces like roads, driveways, and roofs that don't absorb water, causing rain to run off instead of soaking into the ground. Now, check out how much development has happened in just the last 2 decades. Zooming in on Texas, Dallas, Houston, and Austin, you'll see urban sprawl expanding around these cities. Now, as populations grow and economies evolve, development continues and it's not slowing down. If we shift to vacation and secondary homes, there's been a huge change. A few decades ago, there were approximately 3.1 million vacation homes in the United States. By 2022, the number more than doubled to 7.5 million, with 2.5 million listed on Airbnb and similar platforms. This shows a couple of things. First, Americans are not only earning more and affording second homes, but vacation rentals are becoming a real business. Some are even making tens of thousands a month with a short-term rental portfolio, while others, like many of our members, are earning life-changing income from a single well-chosen property that creates multiple income streams. Here's a great example. Brian, one of our members, has done an outstanding job with his property in northern Georgia, and it's now pulling in 6 figures a year across 3 very unique doors with a beautiful view. Now, when he first acquired the property, it only had one completely run down, let's call it a cabin. Now it has 3 luxe-style spaces that have an absolutely stunning view of the lake. When your friends and family start leaving the city, it's probably a sign that the urban to rural migration is gaining momentum. This shift creates a great opportunity for investors, especially land investors. People are moving for more space, lower costs, and just better quality of life, especially with remote work making it a lot easier. Now, as demand for rural and suburban land rises, now is a great time to invest. I experienced this myself. In 2014, I bought 7 acres for $90,000. Today, that land alone is worth around $450,000, and the entire property is valued at around $1.5 million. Being ahead of the curve pays off. Now, as more people move out, rural and suburban areas will just continually grow, driving up land values and attracting infrastructure improvements like roads and schools, making these places even more desirable. Now, both rural and city land has value. Rural land is cheaper and has bigger plots, while city land benefits from scarcity and redevelopment potential. Even though people are leaving cities, urban land can still be a very strong investment. One of the great things about real estate investing is that the potential for some helpful tax advantages. And that's why I teamed up with my friend and accountant Kevin Smoot to create Accountability Tax Strategy and Accounting Services. It's designed for people who want an ongoing relationship with their tax professional, someone who can help strategize around business and real estate. If that sounds like something you need, our team might be a good fit for you. We don't just handle bookkeeping and taxes. The real benefit is our monthly, quarterly check-ins to strategize and answer any questions. You can share your situation and schedule a call with us through the link in the description. Now, over the years, I've read a lot of business investment books, and one lesson from when I was 20 still sticks with me today. Making money is a marathon, not a sprint. Investing in land is all about the long game. Unlike quick flips or rentals, land takes patience, but can lead to very large returns. The key is seeing the future potential of an area. Whether it's rural or urban, it's not just about today's value, but what the land could become in 5, 10, or even 20 years. By investing early, you lock in a lower price and position yourself for big returns as infrastructure and populations grow. This is called land banking, a smart way to diversify your portfolio. While stocks or crypto can be volatile, land is much more stable, and in the right area, it can set up for future success. Rural land is especially great for long-term investors. It's affordable, has room to grow, and offers flexibility. As more people seek more spaces outside the city, rural land is becoming more and more valuable. Whether you develop it, farm it, or just hold on to it, it's a solid long-term investment. Urban land, though pricier, is also a strong play due to its scarcity. And as cities expand, undeveloped land can lead to really large returns, whether you decide to build or sell to developers. Cities are expanding into suburban and rural areas very quickly, driven by population growth, economic development, and just purely social and lifestyle changes. Suburban areas often grow the fastest, while rural areas are experiencing more gradual but steady development, particularly with the rise of remote work and changing housing preferences. This urban sprawl is expected to continue as more people seek affordable, spacious living environments outside of crowded city centers. The demand for suburban and rural homes has surged, driven by remote work and migration from cities. In 2020 and 2021, single-family home construction in suburban and urban areas grew by over 15%, with urban areas accounting for 31% of new homes in 2021, a significant increase from pre-pandemic levels. Urban sprawl continues to expand city boundaries, with U.S. metro areas increasing developed land by 33% between 2000 and 2020. This expansion has caused land prices in suburban and rural areas near cities to rise by 12 to 15% annually since 2020, much higher than the average of 5%. If you've got steady savings and reliable income, you're in a great spot to start investing in properties and land. It's perfect for patient investors looking for long-term growth without the constant upkeep of other real estate, while still leaving room for development options. Now, I always remind clients that positive cash flow is key. Ideally, you should have at least 2 income streams. 3 is even better. But before jumping into pure land investing, aim for 5 months of emergency savings, save or invest $1,000 a month, or roughly 15 to 20% of your take-home income, and have at least $50,000 set aside for your investment. Once you've hit those goals, we can start seriously talking about land or property investments. Land is a long-term play, not a quick flip. It doesn't require much management, so with a stable income and savings, you can hold on to it until the time is right to sell or develop, without stressing about short-term financials. As you gain experience, you'll find even more ways to create income from your land. Rural land is often way more affordable with larger plots, making it great choices as cities expand and people look for affordable or remote living. City land, while pricier, is scarce and holds strong long-term demand. Now, with solid finances, you can hold on to city land and profit as markets grow. Investing in real estate and land is one of the best ways to leave a lasting legacy for future generations. Land is finite, and as populations grow, its value will inevitably increase. Whether it's farmland, rural property, or city real estate, land is a stable asset that holds value over time. Unlike stocks, land is something tangible that you can pass down, and there's a lot of incentives and a lot of tax savings that you can do with this as well. This offers growth, income, and development opportunities, not just for you right now, but also for your kids, your grandkids, and hopefully future generations. Now, Sarah and I were just recently talking about our future plans, and with elderly parents and thoughts of starting a family, we realized how important it is to make sure that our family's needs are covered. We have life insurance and savings, of course, but most of what we're passing down is in real estate and land. These properties will generate tens of thousands in monthly income and are worth far more than what we owe. Now, whether our family sells or lives off the income, they'll be financially secure, which gives me and Sarah big peace of mind. Rural land is a great option to pass down. It's affordable, offers large plots, and appreciates as cities expand, and your family can choose to develop it, farm it, or just keep it for recreation, making it a really flexible asset for future generations. City land, on the other hand, while pricier, is in high demand and can appreciate very, very quickly as cities grow, sometimes in the tens of thousands of %, giving your kids or your grandkids the option to develop or sell for a very substantial profit. Ultimately, though, leaving land isn't just about financial gain. It's about giving your family something permanent that they can build on for generations or live off of, whether it's rural or urban. You're setting up long-term wealth and opportunities, not just for you in this lifetime, but also for your future loved ones. There's a saying that wealth doesn't last beyond 3 generations, with about 70% of families losing wealth by the 2nd generation and 90% by the 3rd. This phenomenon is sometimes referred to as shirt sleeves to shirt sleeves in 3 generations. The 1st generation builds wealth, the 2nd generation maintains it, and the 3rd generation tends to spend or squander it. However, land ownership, when protected, can last for centuries, providing steady income and wealth for 4 to 5 generations, often around 150 years, compared to cash, which is typically spent within 1 or 2 generations if you're lucky. This is what we call old money, where families build enduring wealth through land ownership or early investments in key industries like railroad, oil, and banking. These families grew their influence by strategically holding and passing down land and property. If you want to secure lasting wealth for future generations, land and property remains one of the strongest foundations for creating and preserving true wealth. If you've ever dreamed of owning a cabin in the woods, a lakeside retreat, or just open land, that dream might be telling you that it's time to invest in land. Forget the financial side for a moment here. There's something special about escaping the city, waking up in nature, sleeping under the stars, and having your own peaceful space. Brings a level of tranquility that's just really hard to describe. Owning land has been life-changing for me. Whether building, camping, or just enjoying it with family, the freedom and space are priceless. Land isn't just an investment. It's real, tangible, and irreplaceable. As city life gets busier, more people are craving a peaceful escape, and land provides that. Plus, while you're enjoying it, your land is likely increasing in value. The possibilities are endless. Build a home, create a vacation rental, or simply enjoy nature. Land gives you flexibility and peace of mind, both as a retreat and a long-term investment. Now, today, there are more millionaires than ever before, many through real estate and land investments. For all of our faults and flaws, it's incredible how far we've come in raising the standard of living, especially in places like the US, Canada, Europe, Australia, and New Zealand. Today, we have more access than ever to education, information, data, and most importantly, to each other. All of this helps us make smarter decisions when it comes to our money and investments. And at its core, investing is about managing resources and building security, not just for ourselves and our families, but for future generations. And when we do it ethically, when we focus on improving our communities, we create jobs, housing, and opportunities that can benefit everyone. But the real question that we each need to ask ourselves are, how fast can I go? What risk am I willing to take? What do I stand to gain, and what could I lose? These are the things that we'll wrestle with beyond just real estate or land. Personally, I'm excited to see what we can build and create as humans, things that are fun, ethical, and yes, profitable. The future holds so much potential, and I can't wait to see where we go next. See you in the next episode.